Okay, g'day everybody, Max right here, and I have on a Skype call here with me Alex. You want me to say a quick hello, Alex?
Hello, hello, Max.
And
Nice
Alex
to
reached
meet
out to
you.
me asking for a private one-on-one session and willing to spend a whole bunch of money on me and all these kinds of things. And I said, look, there's no chance that this is I can working one-on-one with people is actually worth it for me anymore with just 30,000 YouTube subscribers and or 25,000 YouTube subscribers, 30,000 email subscribers. If it's not one to many, it's not good. So I said, listen, I'll do it for free, but let's record it, and hopefully a lot of people can learn from it. So this is basically Alex's private Q&A session. Please don't ask for that. These like I can't do this. This is a one-time deal, and Alex just happened to be the lucky one who got it. So that's just that. Please don't ask for more. I just don't have the bandwidth to do it. So with that, I will hand it over to Alex. Alex, I'll take you off the screen now, so feel free to pick your nose and stuff. And let's see, I'll try my very best to answer the questions that you have. And I know you've got a lot of questions about trading, so let's see how we can do it. Go for it.
All right, thank you, Max. Thank you for this opportunity, for sure. All right, I'm having a few questions for this trading stuff. And okay, let's start with the first one. So, when I'm buying coins, let's say for Kraken trading system, by which price am I buying them actually? So, by selling price from the order book. Is it is it like just like in a typical bank system um, where you just buy it at the selling price from the bank, like from Kraken in this case, or is it buying price from this order book, or is it the last price which is indicated on top of the screen there? Because when the transaction goes through, it's usually the price is always a bit different. So that's actually the first question, and
Sure.
the same question goes for the opposite situation when I'm selling or buying as well.
Okay. So with regards to Kraken and all the exchanges, very important that you visualize the concept if you're being matched with a buyer. If or a seller. If you're a buyer, then there's somewhere else on the planet there's a seller, and the service that Kraken offers is that they match you. And so
Uh,
there exists an order book, and you can put an order on the order book, just broad speaking, there's two types of trades you can make. One is you can say buy now, market price, whatever the market price is, buy now. Another kind of order you can make is and put it on the order book, which is I am willing to sell at this price if the price gets there. And when you put that kind of order, Kraken just captures it, records it, and puts it on the order book, and it sits there waiting for someone to come along and say, "I'll take the other side of that." If you were willing to sell at one, and someone comes along and says, "I'm willing to buy at one," it matches you, and the trade executes.
mhm.
So when you do a market order, let's say the price of Bitcoin is $50,000, right? And we're just going to use big round numbers here, okay? Let's say the current price is $50,000, right? What that means is there's lots of people willing to buy below that, and there's lots of people willing to sell above that, and they're all in the order book, and the only price is getting matched is right at 50,000. Okay, so
Okay.
when um, when you say if you come along and say the current price is $50,000, that's where all the trading's happening. I'm willing to sell at $51,000. You put that order on the order book, and Kraken puts it on there, and it sits there and waits and waits and waits and waits and waits and waits.
This is a limit order, right?
This is a limit order. This is a limit. Sorry. Yes, this is a limit sell order. And you know
Mhm.
what? Let's switch this because it's going to be the first time you run through it. It's easier to understand on the buy side. So let's change it and let's say you're willing to buy if the price goes down to 49,000.
Okay.
So you have a buy order sitting on the books at Kraken, and it says if anyone is willing to sell at 49,000, I will buy it at 49,000. Okay, it just sits there and it waits. It can wait forever and never get filled. Maybe the price never comes down to $49,000 ever again, and it just goes up, right? And then you never get filled. But maybe the price comes down and some buyers get come down to there, some sellers come down to there and are willing to sell to you at 49. So let's say that happens. So let's say right now, let's say there's a person A, we don't know, somewhere in the universe, they're willing to sell one Bitcoin at 49,500. There's another person willing to sell Bitcoin at 49,200, and then you're willing to sell one Bitcoin at 49,000. Let's say I come along now and say, okay, I want a market order and I'm willing to pay $49,000, and I want to buy 3 Bitcoin at a market. I'll just whatever the market's doing, I'll buy it. What the Kraken order book does is it will sell the first Bitcoin to me at 49,500 because they had an order on their book for that. And I'll get one Bitcoin at 49,500. It'll sell me another whole Bitcoin at 49,000, I think I said 200. And I'll get another whole Bitcoin for that. And then I said I'd buy, let's say I said I'd buy 2.5 Bitcoins, not 3. Well, it's already given me one at 49,500. It's already given me another at 49,200, and now it's going to give me half a Bitcoin from the other order at 49,000. And so that's why I got 3 different prices when I bought at market. And the language that is used, and actually let me just, you can't see my face, but the people watching YouTube can. Let me just turn my video on for you so you can see. Hopefully it doesn't mess anything up. Actually, no, I can't do both at the same time. Can I? No, I can't. Okay, that's why you can't see me. Sorry about that.
No problem.
Okay. So what they call that is that's called filling the order. So there's a whole bunch of little orders in there, and if you come in with a big one, you'll gobble them all up, and you'll take all those orders out, right? And so now the price is at 49,000, and so more people come in and say, I'm willing to sell more, I'm willing to buy high, etc., etc. And so the whole process of what Kraken is doing is matching orders, matching from buyers and sellers. Does that help you understand the difference of what's happening?
That depends a lot on the volume, then, right?
It does depend on the volume. How much volume is on the order books, right? If you come in and you buy, a quarter of a Bitcoin, a tenth of a Bitcoin, the price you're going to get is going to be really, really close. So there might be 2 or 3 buyers, like it can get really small, but you can have all these people just buying and selling little increments. But if you come in and just like with a big order and say buy 10 Bitcoins, you'll probably get 25 different prices, and you'll clean out a whole chunk of the market book, right? Or if you're buying, you bid it up. All these people willing to sell, you bid the price up. If you come in and sell a whole chunk of Bitcoins, all the people willing to sell, all the people willing to buy, you just start taking out all those orders. You fill their order, and the price of Bitcoin goes down because you came and sold a big dump. So the price that you actually get filled on, you actually never know. It depends. If you do a market order, you don't know what price you'll get filled on. It'll take the orders as they come. If you do a limit order, that's where you put the order on the order book. You can say, I'm only willing to buy at 49,000. And if you just sit and wait, and if the price comes down, there'll be people willing to sell to you at 49,000, and you'll get filled. As long as there's people willing to sell to you, you'll get filled, right? And you get a partial fill because they might sell a little bit and then the price goes back up, or you can fill the whole amount and you got everything at the price you wanted. And on Kraken, the fees they charge are different. If you want to do a market order and just say, give me whatever price is on the order books, that you pay a higher fee. But if you want to come in and pay a lower fee, you can put a limit order on, and I'll pay a lesser fee. Does that make sense?
Yeah, that's the taker and maker fees, right?
Correct. If it's a market, you're a taker, and if you're doing a limit order, you're a maker. You're making the market.
Yeah, you're making market more liquid or something like that.
I'm sorry, what's that?
You're making the market more liquid, or
yeah. What Kraken wants and what exchanges want is they want lots and lots of orders on their order books. So hence they encourage people with lower fees to put orders on their order books instead of just taking market orders.
Mm-hmm. So in essence, if there is no, there's nobody selling, you cannot actually buy. That's what happens. For example, on Trade Ogre, I let's say want to sell, I don't know, $20,000 in Pirate Chain, want to buy Bitcoin, and it just doesn't go through. It stops me on 2,000.
Exactly. And so that's why when you'll always get the best price typically wherever there's the highest volume, and different coins have the highest volume on different exchanges. So like Bitcoin's a really big market. There's lots of volume on Kraken and Coinbase and lots. There's really really big markets, and there's lots of robots working in the background with accounts at all these exchanges. If the price of one exchange goes up, there's robots that'll sell there and buy here, and it'll make a little tiny spread on that, right? So there's people out there doing it. But then when you get into these little tiny coins, then the amount of orders on the order book are tiny, and you can come in and really move the market. It's something you've got to be mindful of. If you're watching the charts and you see something happening and you go, oh, it's a good time to buy this coin, and you only buy $10,000 worth of it, well, in Bitcoin you're not moving the market, but in some little tiny small cap coin you can move the market significantly.
Yeah, I understand. Okay, so that's explained very well. So I'm going to move to a second question then.
Go for it.
It's about shorts and long positions.
Mm-hmm.
So last time I was watching your video on that Bitcoin position, what you were talking about in video, and I tried to take the position on 40. I think it was 48. I was trying to buy it on 48,800, and I put the position. I put the stop loss on 48,500.
Yes.
And I put the take profits on 73,500.
Yes.
So and it said insufficient funds, although my balance was I don't know. My balance was in dollars for around $10,000, and I wanted to invest $5,000.
Okay.
I thought initially that it's only the amount that I need to invest. I have to take care of. So if I have $10,000, if I invest, if I invest $5,000, then it's okay. But obviously it's not. So what do I need to be careful of here? So I need to watch how many funds do I have? What is my balance?
Here's the question: were you trying to buy $5,000 worth of Bitcoin, or did you use the calculator that I give you guys in the Success Council membership?
Yeah, I did. I used this trading risk reward calculator. Yeah.
Understood. So you were willing to lose $5,000.
Yes.
Right? Okay. So the way that works is here. If you I think you said 48.5 you were going to buy, and your stop loss
was 48,800, 48,500 was stop loss, and 73,500 was exit.
Understood. Okay. So the numbers that are relevant here are your buy price, your buy price, and your stop price. I'm sitting in a bad spot for my camera. If you have a buy price at 48,800, and then you have a stop loss at 48,500, that means for every Bitcoin you buy, the maximum you will lose is $300. For every Bitcoin you buy, you're buying at 48.8, you sell it at 48.5. For every Bitcoin you buy, you are willing to lose. You will lose $300 if this trade goes against you. Mm-hmm. Okay. The consequence of that means is if you are willing to lose $5,000 in this one single trade, what that means is you have to buy how many Bitcoins? Well, the answer is $5,000 divided by $300, right? So what are we at? We're talking about 1670 Bitcoin. So in order to risk $5,000 in this single trade, you would have to buy 16 or 17 Bitcoin. 16 Bitcoin times 48,800, we're talking a lot of money. We're talking, I don't know, what are we talking here? Sorry, my phone's ringing, driving me crazy. What is that? So 16 Bitcoin times 50,000, help me out. It's a lot. It's $8 million. Again, you probably didn't have $8 million in your account, right?
Yeah.
Hence it said insufficient funds.
Yes.
So now again, my calculator takes care of all that and does all the heavy lifting for you. So when it says, oh, okay, you got the figure. It says, okay, go and buy 16 Bitcoins. All right, but the problem is you don't have the funds to buy 16 Bitcoins. So that gets us into a conversation about leverage. So what will happen is Kraken will, and other exchanges too, some of them, will allow you to buy 16 Bitcoin even though you don't have enough money for it if you use leverage. I'll have a longer conversation about that in just a moment. I want to come back a step, and I want to share people with share with you and everyone listening the concept of what you're doing here with regards to that. So, sorry, Alex, you can't see this, but on my chart here, you can see Alex came in at a price right here, and he set his stop loss down here. The closer the stop loss is to your buy price, right? If it's up here, what happens is you can see the price moves around up and down and up and down and up and down. You see all these candles, right? The closer your stop loss is to your buy price, what you're doing is you are drastically increasing the likelihood that this will be a losing trade for you. Because the chance of the price coming down just a little bit is a lot more than the chance of the price coming down a lot. So the closer the stop loss is, the likelihood of you losing on this trade is very likely. But if you lose, you'll only lose a small amount, unless you use leverage. We'll get to that in a second. The bigger stop loss you have, the chance of them saying, nope, we're gonna cash you out of this trade, the chance of you losing is very small. I'll give you an example. Let's say you buy Bitcoin at $50,000 with a stop loss at $1. Well, the chance of the price of Bitcoin going down to $1 per Bitcoin is pretty slim. You'll probably get this trade's never going to cash out, most likely. You'll never lose, right? Or maybe it'll go down, maybe it'll come up, but maybe in 10 years it goes back up. But when you set the Bitcoin, you set the stop loss really, really close, the chance of you getting sold out is really high. I had this happen to me not too long ago, going back a couple of months. I think Chainlink was at $12. And I bought it $12, and I think my stop loss, I'm just going to make up numbers, was about $11. And I was really confident and enthusiastic about Link, and I thought it was going to go to $30, which it is. And it just went down to $11. I mean, by a hair. It went down to $10.98. Stopped me out. It automatically sold all of my Link, and then the price turned around and went, over the next 2 months, went straight up to $30, and I was out of the trade. Because I set my stop loss too close. If I set my stop loss further down, I would not have got closed out of that trade, and I would have still been in Link and tripled my money now. So that became what was really a winning trade. I knew Link was going up and going up very nicely, and I got stopped out because I set my stop loss too close. So the trade-off with this is, the closer your stop loss is, the less amount of money you're going to lose per Bitcoin invested. However, the likelihood of you losing goes up. The further the stop loss away, the greater your losses will be per Bitcoin purchased. However, the likelihood of you being a losing trade or getting stopped out becomes significantly less. That's the trade-off that we were doing. I'm really glad that you were not able to perform that trade, because I don't know how big your balance is. I mean, here's why. I don't know how big your balance is, but did you say that you had $10,000 in the account and you were willing to risk $5,000?
No. It was only in dollars.
In dollars, you had $10,000.
Because I didn't understand the concept, because I don't know. It does depend on the currency you're trading with, or does it depend on the overall funds what you have in your Kraken account, for example?
If without leverage. And even with leverage, it will depend on the currency you're dealing with. In fact, I'm not 100% sure of this, but it could be that Kraken will only leverage with dollars. So even if you're buying Bitcoin versus Ethereum, I think it may take your dollars only as the amount that you're leveraged with, but I'm not 100% sure on that. I might have to check that. But let's take the no leverage example, right? Because you weren't doing leverage. You were just trying to buy 16 Bitcoin, which you'd need, is it either 8 million or 800,000, I forget.
It's some big number.
It's some big number, right? So when you set that stop loss quite high, you basically set yourself up to a situation where it was very, very likely that you were going to get stopped out, and they would have closed out and you would have lost money. Yeah. And if $5,000 is a significant portion of your balance, I'm really, really glad you did not execute that trade, because you probably would have lost 50% of your money. If you had only $10,000 in there, that would have been tragic. So something to be very, very careful about. If I recommend, if let's say if your account, if the amount that you are trading with is $10,000, the amount that you should be willing to lose should only be 1, 2, maybe 3% at a stretch. If you're willing to lose so let's run through those numbers now, right? Let's say your account is $10,000 and you're on any one trade, you're willing to lose 1%, right? So that means now you're willing to lose $100. Well, you set your buy price at 48.8. You set your stop loss at 48.5. So if one Bitcoin, you were willing to lose $300, but you in this example, you're only willing to lose $100, which is 1/3. So now you only would have had to buy 1/3 of a Bitcoin in order to risk $100 in that case. And that was with no leverage. With me so far?
Yeah,
okay.
Yeah.
So now we can kind of get into the conversation about leverage, if you wish. So leverage drastically increases the stakes. Leverage is going to increase your risk, increase your potential loss, but also increase your returns if you get it. And it's a simple concept. I'm sure you understand the concept of leverage. If you go and borrow $50,000 from your buddy, come and stick it on the exchange and go and buy Bitcoin with it, you're going to buy a lot more Bitcoin than if you only put the $10,000 that you have. And so therefore, if Bitcoin goes up, fantastic, you owned a whole Bitcoin. If Bitcoin goes down, well, you've had a lot more invested, right? So the leverage is the concept of borrowing money to buy more than what you could afford with your balance.
So actually, if let's say in this example, I invest $5,000, then times 2, I actually lose $10,000.
Correct. Well, yeah, depends on where your stop loss is. Let's not talk about losses yet. Let's say you have. Let's keep to round numbers. Let's say you have $10,000 in your account, and let's say you're completely insane and you want to bet the whole thing, right?
Okay.
And you want to use leverage. So you say, okay, Kraken, I've got $10,000, but I want to. You click the 2x button. Say I want to use 2x leverage, which is 2 times. So Kraken will let you buy $20,000 worth of Bitcoin, even though you only have $10,000 in your Kraken account.
Okay.
So they're giving you leverage. Now here's the thing. Let's say you buy Bitcoin at $50,000 and you buy $20,000 worth of it, but then there's a flash crash and the price of Bitcoin goes down to $25,000. Well, now if Kraken liquidates you and sells your $20,000 worth of Bitcoin, they will be able to sell it for $10,000, which is the amount of money you had in the account.
Okay.
So they can liquidate you and get the $10,000 back so Kraken didn't lose. You put $10,000 in the account, you bought $20,000 worth of Bitcoin, Bitcoin went down to $10,000, Kraken's going to liquidate you and take the $10,000, and now you don't have half of your Bitcoin left. The price only went down by half, but you don't have any money left. Does that make sense why? Yeah. Because you doubled the amount of Bitcoin that you were able to buy because you used 2x leverage. The consequence is when the price goes down by half, you lose it all. And the same concept applies. If you use 5x leverage, you put $10,000 in, Kraken will, if you click the 5x button, Kraken will let you buy $50,000 worth of Bitcoin. You've only got $10,000 in there, you buy $50,000. Now the price of Bitcoin goes down 20%. Very possible. Happens all the time. The price of Bitcoin goes from 50,000 to 40,000. Kraken's like, I'm going to lose $10,000. If I liquidate this guy, I'll be able to get my $10,000 back that he had in his account. And now, even though the price of Bitcoin went down 20%, you lost everything because you were leveraged 5 to 1. Now, they're the two disaster scenarios when you lose. Let's talk about the upside. Let's say you put $10,000 in. Kraken lets you leverage at 5 to 1. You now bought $50,000 worth of Bitcoin. You bought one whole Bitcoin, right? And now the price of Bitcoin doubles. And then you sell it, right? So now you've made $50,000 worth of Bitcoin. Well, actually, what have you done here? No, you bought 2 Bitcoin. Yeah, so now you've got $100,000 because you sold 2 Bitcoin and you pay back the $40,000 you borrowed from Kraken because you only had 10, but they let you buy 50. Yeah. So you've got $100,000 minus the 40. You just turned 10,000 into 60. So if the price goes up, you multiply your reward. But when the price goes down, you multiply your loss. When in the case where Bitcoin only went down 20%, you lost 100% of your money. Does that make sense?
Yeah, so actually, if you invest this $10,000, then you lose all. I mean,
Yeah.
you mean, you lose this $10,000, but I don't still understand. So even if you don't use leverage, if you invest this $10,000 and this is the whole amount you have, don't you lose the whole $10,000 again? I
Depends.
mean,
So we're using the word invest. Okay. So if you invest $10,000 without any leverage, that means
yes.
you're buying $10,000 worth of Bitcoin. Without any leverage, if the only way you lose it all is if the price of Bitcoin goes to zero.
Oh, really?
Yeah.
So you actually don't lose if you got stopped by the stop loss. If you got stopped by
The stop loss. Yeah.
the stop loss, then you don't lose it all, but you lose just a portion of it.
Correct. With that, if you're not using leverage. So for example, if you
Hmm.
remember when you put into the calculator, it says to go and buy 16 Bitcoin, right?
Yeah, yeah,
But so
yeah.
ignore the calculator for now. Let's just say you just put all the chips on the table. You say I want to invest $10,000 on Bitcoin, right? And you put a stop loss in. And let's use those numbers, right? It goes down from 48,000 to 48,500. Lose about $300, right? Well, if you
Yeah.
only bought $10,000 worth of a Bitcoin, you probably only lose like $60, $70, something like that, because you're only dealing with a portion of a Bitcoin, and it went down a small amount. So you could, yeah, if you put the whole $10,000 on Bitcoin and Bitcoin went down by $300, you would only lose $50, $60, something like that.
Okay.
So the stop loss only tells you. See what traders do, because and this is coming from the world of the stock market. See, Bitcoin's really volatile, and so it can go up 20, 30% a day on the stock market and the forex markets, especially. These things move a fraction of a percent per day if they're lucky. And so, in order to make $1 million, you have to put $1 billion in the account, and people don't do that. They'll put $100,000 in the account, but on forex, you can leverage like 99 to 1. And so even you put $100,000 in there, but you get to buy whatever that is, $10 million worth of the Canadian dollar, because it moves by such a small amount. You have to be levered for it to make sense. But in the world of cryptocurrency that moves so violently, you want that leverage to be much, much, much lower, if anything at all. Like if you leverage 99 to 1 in cryptocurrency, like forget about it. Everyone would lose everything in the first minute. It's just too up and down. So the stop loss is there. It's designed to protect you from losing if the trade goes against you. Now, what most traders do is they think in terms of how much, and it should only be 1 or 2 or maybe 3% of your available funds on any one trade. So if I'm going to buy at 48,800 and I'm willing to lose 1% of my balance, which means I'm willing to lose $100 of my $10,000, then you punch it into the calculator and the calculator will tell you you should buy 1/3 of a Bitcoin. Because if this goes against you, it's going to sell and you'll lose $100, not your whole 10,000.
Okay.
Okay? Cool. Next question?
Okay, understand. Okay, let me go back here. Stop loss first. Okay, we covered this. Okay, I discussed this with the balances. You're not sure if you're watching the trading currency or the overall funds what you have in the account. Yeah, so I think you pretty much covered this, but so let's say in this case, what I was doing when it said insufficient funds. Can you actually do? Is there some formula actually that you can calculate? What is the biggest amount you can invest to pass through the system?
I'm sorry,
Uh,
what is the biggest amount you can invest through the system?
yeah, so it doesn't depending on your funds which you have. What is the how much actually you can invest? For example, if you don't want to invest only 3%, let's say you want to invest 10, 20% of your funds.
So,
And then
so help me understand the question. Are you asking for what are the limits on Kraken that you can invest?
no,
Or are you
for
saying
this
as a good strategy for a trader, what is it that someone should do?
for the position what is how to explain it? So what is the amount I can invest? But the biggest amount I can invest that Kraken pass me through. That will take this position depending on my balance, depending on my
Okay.
funds.
So I mean, I highly advise against it, but the limits of Kraken, and it's different on different coins. On some other coins, they don't allow leverage at all. On some altcoins, they only do 2 times leverage. On Bitcoin, they allow 5 times leverage. So for every dollar you have in there, they will let you buy 5 if you use the maximum amount of leverage. So if you have $10,000 in the account, they will let you buy $50,000 worth of Bitcoin.
Mhm.
That is the
Ah,
limit. That is the limit that Kraken will do.
so actually, if you use leverage, you can actually invest everything
Yeah,
what
you
you
can
have.
you can invest your whole 10,000 multiplied by 5.
Yeah,
What for every
understand.
dollar you put in, they'll let you do 5. Again,
Uh-huh.
so you understand the risks. If the price of Bitcoin goes down to $40,000, so the price of Bitcoin only went down 20%, then
Yes.
you will lose everything if you are fully levered at 5x.
Yeah, I understand. But if I'm full leveled at 2x, then I lose how much?
Let's work it out. So you put in 20. So you put in 10 and you did it 2x. So they let you buy 20.
Mm-hmm.
$20,000 worth of Bitcoin. The price of Bitcoin went down 20%. So so yeah, sorry. Do you want to do the situation? You want to know when they will liquidate you, or do you want to know
Yeah.
how much you lose when they will liquidate you?
How much I lose? Yeah.
How much you lose? Okay, if the price goes down 20% in the same example, but you're only leveraged 2 to 1, well, you will lose 40% of your money, I think. Is that the way it works out? So you get 20,000, price goes down 20%. So the value of the Bitcoin that you own is worth 16,000. And then you liquidate it, so you will have lost 4. So that was 40%.
So
So
it's, you invested actually 10, so you rest with 6 then, if
yes,
you lost 4.
correct. That's
Yeah.
exactly right. The price of
That's
Bitcoin
a
went down
2x.
20%, but you lost 40% of your capital because you were leveraged 2x.
I understand. I understand. So actually, what you can do with this leverage, you can buy 5 times in the best case scenario, you can just buy 5 times more. Then you have the balance then you have the balance actually,
Correct.
and that's the limit. So that's the limit.
That
This
is the
leverage is
limit.
the limit.
So what you could do, what some people do, is if you're a long-term holder, you might say, look, forget about this stop loss. Like if you want to be, this is a very aggressive strategy. It's a very risky strategy. I'm not advising it.
Yeah,
So
just
you don't have to use a stop loss. So remember I talked about investors and traders. I
yes.
suggest investors don't use a stop loss. Investors just you're not I'm not saying you. If for one who is not a professional trader, don't try and be a trader because there's a bunch of professional traders out there and they're really good at it and they'll fleece you and you'll make mistakes, you'll lose money, they make money. It's how it works. Remember, for every buyer there's a seller. That means for every winner there's a loser. If you're new, you're probably going to be the loser because they're really freaking good.
Okay.
So with that,
So actually, they kick you out.
yeah, they're the ones who get your money. When you lose, they get your money, right?
Yeah.
So that's trading. That's trading is you use stop losses and risk calculators and a whole bunch of things, right? If you're an investor, you just think, listen, I just think Bitcoin's going to go up. I just want to buy $10,000 worth of Bitcoin and forget about it. I'll come back in 2 years, for 3 years, 5 years, 10 years. Hopefully, I can sell it for more and I made money, right?
Yeah.
That's called being an investor. Now, if you can use leverage as an investor, and you can say, well, I put 10,000 in exchange. I'm just going to buy $50,000 worth of Bitcoin. And now in 3, 4, 5 years' time, when it goes up, it goes on leverage, it goes up way more. So why wouldn't anyone do that? Here's why someone wouldn't do that. Here's why it's important you understand your liquidation price. Kraken will never let themselves lose money. When they let you leverage, they're the ones lending you the money, right?
Okay.
So you've got the 10,000, they lend you the 40,000. They need to make sure they can always get that $40,000 back. That's why when the price goes down 20%, the price was at 50,000, the price goes down to 40,000, they can sell all your Bitcoin and get their $40,000 back and leave you with nothing. So they didn't lose. That's their liquidation price. So if you're a long-term investor, I'm just going to hold it for 10 years. Some people who want to be aggressive might want to use leverage. The consequence of using leverage is that if you don't use leverage, you'll never, ever, ever be forced to sell, ever. There's no amount the market can dip where you get forced to sell. If you use leverage, now all of a sudden Kraken will force you to sell at a certain price. In the case of 5x leverage, your liquidation price will be $40,000 at a $50,000 purchase price. At the case of 2x leverage, it will be, I think, $25,000. If the price of Bitcoin goes all the way down to $25,000, they'll liquidate you and force you to sell and leave you with nothing. So when you use leverage, you introduce that risk. And it's very important that you understand your liquidation price before you use leverage.
I understand. So liquidation price is always if you use leverage 5x, then it's what you say, 20%. No,
yes, it is. If the price goes down 20%, that's your liquidation price.
But that's on 5 times leverage.
That's on 5 times leverage.
Yeah.
Yeah.
And on 1-time leverage, what is a 1-time leverage actually then?
1/10 leverage.
No, 1 time. So there is
one time. One time. I don't think 1 times leverage isn't a thing. 1 times is just using your whole amount of money. It's not leverage. There's two times leverage, 3 times leverage, and 5 times leverage. I think Kraken does.
Okay, so what is the percentage then on 2, 3, and 4?
At 2x leverage, if the price goes down 50%, you get liquidated.
Okay.
At 3x, I think it's if the price goes down 33%. And at 4x, if it's the price goes down 25%. I just double check all those numbers. I'm doing this stuff in my head on the fly. So I don't want people to take that as gospel. Oh yeah, by the way, where's my disclaimer? Big fat disclaimer. I'm not licensed anything and I don't know anything. Anyone who listens to me is an idiot.
Okay. So next one. Just want to find it in the list here. Thank you. I think this is very well explained. I understand it very well now. With this leverage thing and the positions. So in this last video, where you were explaining that you will put this long position on Bitcoin, as the Bitcoin is now in some, it goes up, and you're gonna take this position somewhere around this 46 and exit out on 75 here, something like this you're explaining. But you're telling something like that about filling in. You said a lot of people already know this information as you're sharing it. So a lot of them will take, will make this the similar or same position.
Correct.
So you said also someone might not get filled in. What does that mean? I mean, does that mean that Kraken won't allow somebody else to? Right. So it is only a limited amount of positions you can take for, I don't know, 10,000 people. They can.
So think of it this way. There's only a limited number of people that you can be matched with. So if you let's imagine, it's not like this, but let's imagine in the order book, there's a nice, smooth, even distribution of people willing to sell. When it gets to 70, there'll be 10 people willing to sell. When it gets to 71, there'll be 10 people willing to sell. When it gets to 72, there'll be 10 people willing to sell. Let's imagine it's a nice, smooth distribution. And the number of people is irrelevant. It's the amount of units. So the amount of Satoshis willing to be sold at that price is really what it is. So let's say there's a whole Bitcoin at 71,000, there's a whole Bitcoin willing to be sold at 72,000, a whole Bitcoin at 73. Okay, and let's say there's all these people watching charts out there, right? And a lot of them have this target of 75,000. Well, at 71,000, no one really wants to sell because everyone thinks it's going to get to 75. And so at 72, no one's going to sell. At 73, no one's going to sell. At 75, and all of a sudden 5,000 people come in and want to sell at exactly 75. But there was only 10 units willing to be sold, 10 Bitcoin available for sale there. So they get sold, and a lot of people don't have their order filled, meaning they never got matched with a seller. And then all these people start selling at 75 and the price starts coming down. So what I advise is as it's going up, it probably won't get to exactly the target. It'll fall short. And you want to pick a number 2, 3, 4, 5% below. And that is what you're doing is you're making it much more likely that you'll get filled, meaning you'll get matched with a seller. If you wait until the end, Now you're part of the masses trying to jump in on this sale, and there's only a handful of sellers there. So you get, and if you don't get matched with someone, then you didn't sell. So by choosing a number just 2, 3, 4% below your target, your likelihood of getting filled, i.e., getting matched with a seller, is much more likely.
Yeah, I understand. So, good. I understand this. Okay. Next one. Okay. So let's this is a time frame question. If I set let's say I'm doing just a regular trade. If I set the time frame, so I want the position to be activated, I don't know, on 14th at 2 o'clock, and then it got activated, but I also put deactivation. I don't know, on 3 o'clock. Does that same position deactivates itself once it's activated, or just stays? Or if it doesn't get into system, then deactivates itself?
I'm confused by this question. I think
Yeah,
I think what you're talking about is when you
I
fill
think
out an order, you can
yeah.
say this order is good till cancelled, or you can say it's good until some time. Is that what you're talking about?
No, I was thinking like you have this thing there for activation. I'll just take a look quick. Now you have start now and expires.
Yes.
Good until cancelled. Yes. I was thinking. Yeah, I was just looking at it wrong.
Yeah. So what this is again. So this is not for a market order, but for say a limit order. If you're wanting to put an order on the order book, you can say it's good until I physically cancel it, which means it will stay on the order book forever or until it's matched. Or you can say it's good only for the next 24 hours, or choose some time frame. I generally don't use the time frames. I just use the good till cancelled. But there are some trading strategies whereby you would choose a good for some certain amount of time.
So, so actually, if you put I don't know, good this day, if the I don't know, if this trade doesn't reach the profits you want, it's cancelled in this day.
Correct. If the order has not been matched, then remove this order from the order book. That's exactly what it is.
Yeah, and but you don't lose anything. You just lose the opportunity.
Correct. Yeah, just the order is cancelled. Just the order is cancelled. That's all. And that's the sell order or the buy order, whatever it is.
Yeah.
It's just take that order off the order book. That's all.
Okay. There on your for subscribers on your on your council page, Success Council, in the first video in the section of trading, you have the first video on shorts. I think it's Ethereum example there. You talk about moving stop loss price below the buying price in order to take profit. If I understood this correctly, as upon monitoring, the chart wasn't moving as you predicted to. So you said that in such case you would pull out of that trade or move the stop loss price below the buying price in order to take profits. So how does that function?
Okay, that's just a strategy, just a thing that I do, and I did it in that example. So the trade was already well in profit, and so usually when you start a trade, you put a stop loss where if the price goes down there, you're going to lose money, but you cut your losses and you just lose money and walk away from that trade. But when the trade goes in your favor to start with, what some people do and what I do sometimes is I move my stop loss not from a point where I'm going to lose. I move it to a place to where even if the price turns around on me and starts going in the wrong direction, that I still have won. Like my stop loss is now inside my area of profit and not in my area of loss. And so if you can imagine, let's say it's a buy. Let's say I buy at 50,000, I put my stop loss at 48,000, let's say. And let's say the price starts going up, it goes to 55, 60, 65,000. And in my head, I'm not going to sell until it gets to 75,000. But then there's some bad, and the first thing, I've moved my stop loss. So now I'm at like 60,000. I've probably moved my stop loss from 48,000 to 55,000. So even if I get stopped out, I'm still in profit. Okay. But now, if let's say there's some bad news and, I don't know, the government changes some legislation and the market starts crashing, and now it looks like, I think, okay, there's now external factors which make me think this is going to send the price all the way back down to where I started or even get stopped out. It's just, you can choose to take the options like, I can look at the charts and see that the price is going against me in a sustained fashion, not just a little bit, because it always comes back on the way up, but in a more sustained fashion. Then I might say, okay, I'm just going to take my profits here and not try and get all the way to 75,000. And that's just a strategy and something that you can do along the way.
Mm-hmm. So you can actually always monitor a trade, and you can just change it, modify it well when you wish to.
Correct. When you make the trade, and I always do a conditional close with it, so I make the trade and I put the stop loss on the order book at the same time. Very often I'll just do buy at market and add a stop loss. That one just gets executed automatically. The stop loss goes on the order book, and if the price ever gets down there, I'll sell and I'll take my losses. I lost my train of thought. Where was I going? Oh yeah. So at any point, that order is sitting on that stop loss is sitting on the order book. You can go and cancel it and create a new stop loss at a new price. You can do that whenever you wish.
So actually cancel the whole trade and enter the new one.
So be careful of the words you're using. You're not canceling the trade. You can't cancel the Bitcoin you've already bought. You're canceling your stop loss.
Ah.
Okay? Canceling the stop loss only. You've already bought the Bitcoin. You're already in profit. You can't cancel it. B, you don't want to because you're in profit. What you can do is cancel remember, when you bought, that got executed, and you now already hold the Bitcoin. The stop loss is sitting there on the order books waiting to get it executed. You can go and cancel it and start a new stop loss at a higher price, for example, and that way you can move your stop loss around by canceling the old one and introducing a new one.
Mm-hmm. And or you can choose to don't have one as well, or
you can choose to what?
Don't have one.
Don't have one. Yes. And I advise investors to not have one. Yeah, investors I don't think shouldn't have stop losses. Just buy and hold. The price might go against you for a little while, but I think it'll come back. If you feel the same way, do that.
So you can actually modify this trade as many times you want to.
Correct. You can.
As you wish. Yeah.
Yeah.
Okay.
You can move those stop losses as often as you like.
Yeah. Okay. But how does this affect the profit when you move this stop loss, for example? You're of course getting less, right?
Well, if you move your stop loss up, in the instance where the price turns against you, when you get closed out, you get stopped out, you actually increase your profits from what you would have had because you moved your stop loss into a better location. So again, I bought at 50. My initial stop loss was at 48,000. The price goes up to 70,000. I might cancel my stop loss at 48,000 and reintroduce my stop loss at 60,000. So if the price goes down from 70 to 60, it'll liquidate me and close out my trade at 60. Well, that's good. I bought at 50 and sold at 60, so I made money.
Oh. Okay. Okay. Let's say I don't see the chart is moving well for me, and I don't want to risk anymore. I can cancel the whole trade with no consequence as well, right?
Hang on, no. So before the trade is executed,
yeah.
So when you do a stop loss, you do it at the same time, but there are two different orders on the order book. Let's say you purchase at 50. If the price gets to let's say it was a limit order or a market order, either way, if the price gets to 50, you're going to buy. You now own the coins. You can't cancel that. You own them. Right?
Okay.
The stop loss is sitting on the order book. You can cancel that one, introduce a new one, or cancel that one and have no one. If you don't like the trade, what you can do is it's not canceling the trade. You can sell the bitcoins that you've bought at any time.
Understand.
And suffer the profits or loss that would occur that's selling at that price. So just
Okay. So
when you said cancel the trade, just that language was not quite correct. It's like you undid the buy that you've already done. You can't undo the buy you've already done. But what you can
mhm.
do is liquidate or close out the trade and then sell what you've bought or buy
Yeah,
what you've
I
sold
understand.
in the case of a short.
I understand. Okay, great. Understand this. So how many different positions can I enter in total for one coin or different pairs of coin?
An infinite number.
Uh,
There's no limit on the number of positions.
no matter what kind of funds you have, no matter.
The amount, as long as you've got the funds for it, the number of trades you can is infinite. You can do 100 coins at 100 different prices. It's no problem. You can buy Bitcoin at 50,000, 50,001, 50,002, 50,003. The number of trades is irrelevant as long as you've got the funds to support it.
Okay. And what about so let's say you make these positions and you fill in your funds. So you cannot put more positions because your funds don't allow you to.
Mm-hmm.
And can you do the regular trades, just sell and buy? You can't, right?
No. Think of the concept. The exchange is never going to put itself in a position where it can lose money.
Yes.
So it needs to have your money as security for everything that you do.
I understand. So let's say I put some position, and for this position I use half of my funds, so I can buy and sell with. If I want to use these regular trades, just sell high, buy low. Then I can use only half of my amounts because I already used half of my amounts for position.
Correct. Yeah, you might have lost me a little bit there, but it sounded right. If you use half your funds on one trade, you can use the other half for another trade.
Okay. Okay, I understand. Uh, good. I'm going to next one.
And I just give you a heads up, I only have about 5 more minutes left.
Aha. Which goes if this is not within Taurus. Time condition position acting as a don't bend time condition. Leverage. We explained the leverage in calculation. Yes. What about these order types? What is the difference between this order different order types? Like there is a stop loss order and stop loss limit order function, then take profit order and take profit limit order, and the settle position, along with market and limit positions as well.
Okay, there's a lot there.
Yeah.
So the main ones you use, there is market, and that is just buy at the best price you can from all the things on the order book, right? And you're guaranteed to get executed immediately, and you'll just buy whatever price there is. That's a market order. A limit order is only buy if the price goes down to X, and you get to choose X.
Okay.
You can also use a limit order on a sell side. Only sell if the price goes up to X, and you get to set X.
Yes.
Okay. Next most important one, stop loss. It's kind of similar but opposite. So, with buy, a limit order is only buy if the price goes down close enough, far enough, because you want to buy it. If the price goes down to this cheap, then buy it. Okay. A stop loss is the opposite. Only sell if the price goes down.
Mm-hmm.
That's what a stop loss is. And the reason you would do that is to mitigate your risk. I think the price is going to go up. I'm going to buy at 50. But if it goes down to 48, I was wrong. Take my losses and get the hell out. If the price goes down to X, sell. Okay, so let's recap them. Market. Buy at whatever the hell price you can get. Guaranteed to get filled immediately. Limit order. Buy only if it goes down to X. Stop loss. Sell if it only goes down to X.
Mm-hmm.
The other ones, I would suggest you be at another 6 to 12 months of trading before you use them. So I don't want to, I think it's going to overcomplicate things to use them. With one exception, I think you asked about the term settle.
Yes, settle position. What's that for?
I could be wrong on this one. This is a guess, so for everyone listening, double check this. But this is what I think settle means. If you let's say you buy Bitcoin at 5x leverage. Okay, so you buy, all right, I've got $10,000 in the account. I click 5x leverage, and Kraken lets me buy $50,000 worth of Bitcoin. The price of Bitcoin goes up, And Kraken, by the way, with all the leveraging, Kraken has a 30-day limit. You can, how many fingers have I got up? 30. The Kraken has a 30-day limit. You can only leverage for 30 days. After that, even if you're in good standing, you're not getting liquidated because the price has fallen or whatever. You're getting liquidated because the 30 days is up. So they will liquidate you after 30 days. You can only leverage for 30 days. So let's say you had $10,000 on the account, you 5x levered, you bought $50,000 worth of Bitcoin. The price of Bitcoin doubles, right? So you now have $100,000 worth of Bitcoin. However, you're still in a levered position. You still owe Kraken the $40,000 they lent you. What I think settle is, and when you click settle, I've never used it, so I'm just kind of guessing. When you click settle, what it will do is it will sell the $40,000 worth of Bitcoin in order to repay their loan. And you keep the $60,000 worth of Bitcoin, and you are now no longer in a leveraged position. You just have $60,000 worth of Bitcoin in an unlevered position. Because what I think settle means is to settle the loan. So sell enough crypto to pay Kraken back their loan, and leave the rest in for me. I'm going to let it ride on Bitcoin in an unlevered position. And if you want, once you do that, you can go and re-lever it if you wanted, but that's another story. But they have a 30-day limit, and so you should all, I think there's some pretty nasty fees if they at the end of that 30 days they hit you with some fees. So you want to manually settle if that's what it does. Double check versus letting them do it for you.
Okay. Okay, great, thanks. And what is this tick box? Post limit order. There is a tick box.
Post only?
No, there is a tick box on the right side of the system on Kraken, where it's a tick box. Post limit order. You can tick it. You can actually put a tick on. Post limit order. It says. What's that for?
I'm not sure. Kraken has really good help files, by the way. So if you search that in their help files, you'll find that. But I'm not sure. And I really recommend, I totally guessed what settle means, so I've never used it and never read it. So I really encourage people to check that out.
Okay. Good. I think I passed all my questions actually. I only have more this, what it means in order book, cumulative cost, cumulative volume and cost in the order book. What's that for? Is this important or?
I'll explain what it is. I didn't hear all those words, but so in the order book, so in you're looking at your Kraken screen right now. Are you looking at the black screen with the numbers changing all over the place, or are you looking at the white screen that's quite clean?
Yes.
You're looking at the white screen?
Yeah, I'm looking right now at the advanced order screen. There is the prices are changing up, and in the order book as well.
Okay, so you can see the order book. So can you see in the order book? Can you see that kind of that red triangle, like the red squiggly line that's on top of the green squiggly line?
Red triangle.
Yeah, like it kind of looks like a red triangle. Yep. And it's yes. Right now, if we're looking, I'm on Ethereum. But anyway, you can see there's kind of like there's a red triangle on top of a green triangle. So that is a picture, a diagram of the order book. And you can see how the price where the buyers and sellers are getting matched is where that red and green triangle join. That's the price the current price of Bitcoin and where buyers and sellers are matching. The rest of it is a diagram of just how many Bitcoin is available in the order book. In the case of the red one at the top, it's how many Bitcoin is available for sale. And you can see it gets bigger and bigger and bigger the higher the price. The higher the price goes up, the bigger that triangle, the fatter that triangle gets, and that's the cumulative amount of Bitcoin available for sale at those prices. Likewise, in the green triangle, as the price goes down, the amount of people willing to buy gets fatter and fatter and fatter until the triangle gets fatter as you go down. And that diagram is a picture of the cumulative amount of Bitcoin, in this case, available for buy and sale on the order book at present. And it's constantly dynamically moving, as you can see.
Okay. Yes. Okay, thank you very much, Max. I think you covered all my questions, that's for sure.
All right, Alex, it was a pleasure. Thank you so much. I think it was really good questions too. I think a lot of people are going to learn from this. I will suggest, really highly recommend, and I would recommend this for everybody as well. Your first, like at least half a dozen trades. I'm pretty sure Kraken allows you to do it like paper trading only or pretend trading where you're not using your real money.
Yeah.
Do
Training.
training, yeah. Do that, and just get a little bit of experience of buys and sells and limit orders, canceling orders. Do that, and then when you go live, then I would do another half dozen with really small amounts, like way smaller than you, like to the point where you're bored, because it's like, oh, I'm never going to make money investing $3, but do it with a small amount because it's just one wrong click and you can lose all your money real fast. So it's a dangerous environment. It's just like it's like learning to drive. You don't just jump in the car and jump on the highway. It takes a lot of practice. So I really recommend you do those things first.
Seems more difficult than driving.
Yeah, I think you're probably right. Cool. All right, Alex.
All right.
I greatly appreciate your time. Thank you, buddy. And I'm sure everyone on YouTube appreciates this. By the way, let me know in the comments below. Did you like this format? Did you smash the like button if you liked it? If you have any thoughts, queries, you think this type of thing is cool, you might want to do it again, let me know in the comments below. I'm open to this kind of stuff. All right, guys, take care, and I'll see you soon. Bye-bye.